welcome. A good day on the whole, although I did slip up marginally in the Euro session, which is a shame because everybody's in the room watching me. So let's just go through my successes and then lessons that we can all take from this, including myself. And so what I was looking for on this Dow was this to roll over and break further down these lows, and with 2 hours of the session to go, we are potentially still going to crack down here, and I was aiming for at least a retest of last week's high and a move. I thought we'd be at least down to the Sunday Open by now. At the moment that has not been the case, so got some money out of it. What it was hoping for a lot more, but hey, I'll take what I can get. Right, so let's just go through the. Let's go back to the Dow and just finish off talking about this. Let's just look at the 60-minute chart. If you master these 60-minute charts, then you'll do well. And from Monday open, we sold at 876. From Tuesday open, we sold at 855, and today's open we also sold at 855. So guess what? I was short initially from there. I didn't call it because it was not a strict scalper school setup. However, it was clearly just basic support and resistance. I did, the straight horizontal line over there at 879, dragged that down to yesterday's breakdown area there, which is what I had marked up in the 15-minute chart that I showed you, and it's smack on, and that's how these algorithms work these days. So I hope at least what I did give you was the safer, higher probability entry, which was 810. So it's not that much further down from here, so it's only 46 pips lower in the 15-minute chart, which would have given you sorry, the 5-minute chart, even the fade. So there's the range. There you can see how we've dropped out of it yesterday very aggressively. So we're almost, it's a carbon copy almost of yesterday's action. The look of that chart is very, very similar to the look of that area there. Do the same thing every day and expect the same results. Get that fixed in your trading mind and your trading psychology, and you will do well. So here we are breaking down from yesterday's close at the moment, 55, just 10 pips under that, looking as if that can tip over. All right, but there's the fade, there's the entry. If you take every fade that you see particularly on a pattern like this, you should do well, because on average 77% of them will give you a good move. So that's my overall message to you: take every fade. And I would also say to you, stay in it. Once you get the fade, stay in it, because we are still not far off of the lows of the day at the moment. Only about 25-30 pips off the low of the day still. So had I done that with the DAX and not tried to take it the other way, then I would have done well. So the 5-minute chart is here. There's the big drop to the Sunday open. There's the fade up there at 239, 240. Dropped and pulled back. So it looked as if it was about to, in the smaller time frames, looked as if it was about to buy there and push up. I was looking for this to hold, and it didn't. So so getting a fade and try holding them, at least some of them, some of the fades you take. Okay, so I saw this 200 moving day average here, and thought this area here would hold. We'd already tested the Sunday opens. I thought with that this higher close and 200 underneath us, we might pop back up, but no, volumes are too low. There was not enough buyers to support that, and down it came. And I'm really shocked that I was using a badly fitting 60-minute fib. I cannot fathom what I've done wrong there. But that is how the 60-minute fib should have been fitted. So yesterday's lows were the previous week's highs. We rejected that we stayed under there from 11 o'clock right through the day. So it's common to get a 60-minute, what looks like a potentially 60-minute buy signal, only to breach it in a good day, on a good trending day. So just watch out for that in the future. If you look at the way the Dow is at the moment, the Dow's been holding for 3 hours, got 3 higher closes on there, but still I would suggest that's lower. It may just be that the euphoria about the tax changes is going to hold it up, but at some stage this is going to push lower. You can see this 161 extension up here, so plenty of reason to sell that. The MACD is beginning to get divergent. The histogram is lower, so we are definitely running out of steam, definitely running out of momentum. So watch out, because in the early January and February is traditionally bearish, because the pension schemes, IR35 they call them in the US, retail traders have to declare their earnings on stocks and shares the back end of the year, the calendar year. So that's why you tend to get a flush out in the back end of the year. The market knows this. The institutions that manage the float of the stock know this and will work it into their favour. Right, in the meantime, the pound US, I suggested a short on this one, and here's the setup. Knocking our heads against that resistance. I suggested a stop at 27. So I've managed to stay in the trade, but again we've got a holding bar there, but I don't think it will work. What I suggest you do is either take it off so you don't have to sit with it overnight. There's the 50% down there at 385 that we already tested. So far held, but unfortunately it's not done. One way I think you can improve your trading, just switching away from that a second, is this. If you have a chart that's really bullish like this, and you get a big move up in the morning, you can see how it's held last week's highs up here at 390, and then the highs were at 475. So 85 pip push to the upside in this. One way you can do this is, particularly if you're not at your screens, here's the 5-minute chart, there's the range, and at 12 o'clock midday it dipped under the range and it went immediately back. Now, if you've got a situation like that, you could put an order in the book for say 390, a stop underneath this 200-day moving average. You only need a 15 pip stop, and you know how reliable these fades are. They're very, very reliable. They don't always work. Nothing's guaranteed in trading, as you all know, but if you trust these setups, put an order in the book after the Euro session, particularly if you're out of work, put in a 15-minute target. So that's the 15-minute chart. That is the range. There, put a target in of at least 127, if not 161. 161 was 470. So if you'd put an order in the book for that pullback, that fade into the open range, and put an exit order based on a 15-minute chart, you would have caught this move. All right, you can see how strong it is because look at this moving average. Let's take that away. This moving average, we've only closed under it momentarily on Monday night, and ever since we have been pushing up. Let me just double check. It's the 50. It's the 20, right? 20-day moving average, exactly the moving average that sits in the middle of a Bollinger Band. And think of it, it's 4 clear trading weeks. The 20-day moving average is a nice one. And you know, I was ideally, had we come down to that Sunday open at 233, I would have gladly bought that, but it's been too bullish, and this consolidation pattern is now over. It looks as if we're closing above this, so a pullback now to 400 could see us go to, talked about this before, if the range is 137 to 450, that is a, give or take a few pips, a 300 pip range, so we should be looking at a move into, I don't think it's going to, I'd be very, very surprised if it's got the momentum to do it now. I think that could go to at least 138 and maybe into the early part of January, February. If all goes well, then we'll come and touch that 140. All right, so the distance that the box has been playing in should now act as the distance for the target once we open and close above this 450. If we immediately close underneath this, either this week or next, and we don't open and close above this, then this could be over. All right, so I'll keep an eye out on that for you. But I've been talking about this consolidation, so frustrating that I took my eye off this one this week and didn't get the pullback that I wanted. All right, as we speak, the pound is just holding out potentially, but I still think this will roll over. It's just a question of if we close above, if we get into, we're around the 400 mark, we could come and test this 475. Otherwise, you know, I would get short and stay short, and then see if we can at least come back and test that trend line. Because if we close under that 133, I think we're going to get down to 130 pretty quick. And I don't think we've had some good data in the UK. Jobs has held up well, even inflation has held up well, unlike a lot of other G7 countries. So, but if Carney's right and inflation has peaked, then this could be about to roll over. And I think that area there, at 445, is going to be crucial. If we close above there, this could really boost up, could run up again. All right, so to sum up, take every fade, as I showed you in the DAX and the Dow today. If you've got a breakout, potentially look for a fade later in the day in the Forex. Consider putting an order in the book with a modest position size that's well in line with your account, and a stop that's good enough to keep you in the trade, and that is a good way to trade if you are not about. I do hope this video has helped you. So over the last couple of days I got a -12 stop out in the DAX, +40 short in the pound US dollar, +51 in the pound yen yesterday. Another stop out in the DAX this morning, 32 pips on the fade. I'm 20 pips up on the pound US short, and just over 80 pips for the Dow shorts. So overall, if you include the stop outs and the calls I made in the WhatsApp room, the message room, sorry, the alert room, and of course the Skype room, which is mirrored in the Skype room, then we're very much on top. 2 stop outs and 5 winning trades. So the ratio is good. All right, stay tuned. I hope we get some good moves tomorrow because, let's have a look at the data. Thursday we have got, okay, we've got, be careful if you're in a yen instrument because we've got Japanese rates overnight. Press conference 6:30 in the morning, just at the end. That's after the half an hour after the Asian session has finished. And then we've got UK public sector borrowing and core retail sales for CAD and final GDP. So it's a big day tomorrow. And then I think that's going to be pretty much it. All right. Hope that helps. And let me know if you are happy. If you're in the WhatsApp room, let me know if you want me to make any changes to the way in which I'm using it at the moment. All right. Thank you very much for listening, and I will see you in the room tomorrow.